When you put your money in the stock market, not being ready for a big crash is like getting caught in a rainstorm without an umbrella. Imagine your stocks dropping fast, your hard-earned money shrinking, and all your plans getting washed away. That's what can happen if you don't watch for the warning signs. But what if you can protect your money, even find ways to do better when the market drops? Let's stay calm when everyone else is freaking out. Finding good chances to make money when others are just scared, waiting for things to calm down before they stick their heads out. That's what we're going to talk about here. Hi, I'm Ted Thomas. Welcome back to my channel, which many refer to as the Wealth Without Risk Destination, where we help people discover and take advantage of one of the best real estate income opportunities most people don't even know exist. I've spent 30 years helping people just like you through the ups and downs of the stock market. And in today's video, I'll share with you how to spot the big warning signs of a market crash, its direct impact on the housing market, and what you can do not to just get through the difficult market, but to come out better on the other side. Let's get started. Stock markets get a lot of publicity. It's well known that in 1929, almost 100 years ago, the stock market crashed and the country went into a recession. It did not bottom out until 1932. At that point, the market had dropped from its peak all the way down. It had dropped 80%. Imagine losing 80% of your portfolio. More recently, in 1987, the market plunged again. Not quite as badly, but it dropped 25%. In the year 2000, the United States and most of the world suffered the dot-com bubble burst, and the market dropped 50%. Imagine your stock portfolio or your real estate portfolio dropping 50%. In 2008, there was another crash, especially for real estate. The housing market in many areas dropped 50%. In Las Vegas, Nevada, and Phoenix, Arizona, the markets dropped 70%. Are you prepared for this? Before I go into the growing concerns and signs and signals indicating a potential crash, I want you to know that I'm not a preacher of doom. However, I'm also not a stockbroker or a financial advisor. I'm just an investor in safe haven investments referred to as government certificates, called tax lien certificates. Now, my emphasis is on preparation, not on getting caught off guard. Before I discuss a little more marketing history, I want you to understand I'm a risk-averse investor. I search diligently for investments that are predictable, certain, and secure. I'm not a speculator. I've been involved with guiding and teaching ordinary people about government markets called tax lien certificates, where ordinary people can earn 16%, 18%, 24%, and your check comes from the local government. I also teach eager investors how to make money with tax-delinquent real estate, where they can learn to purchase real estate for discounts of 60%, 70%, 80% below the tax-assessed value. You have likely heard mumblings and rumors about a market crash. There are dozens of forecasters on the radio, television, and the newspapers. This is not always idle chatter. Reality is, investors should take notice of the market signals. I'm talking about not just surviving, but thriving when the market takes a dive. Markets do not always go up. Let's make sure you're not caught off guard and lose your assets. Let's face it, you don't know what you don't know. History tells us a lot. Earlier, I discussed 1929 and many crashes since then. It's common for investors to say, bulls make money, bears make money, and pigs get slaughtered. Let's investigate that. The translation is this: bears make money when the market goes down. That's a sophisticated way to make money. Bulls make money when the market is ascending, when it's climbing. Investors need to learn to be cautious because pigs get greedy and they get slaughtered. If you are not prepared, your financial security is at risk and you could easily lose your assets in a stock market crash. When I say you lose your assets, you could lose your home, your savings account. You could lose your family because you can't afford to support them. Now, here are a few ideas and solutions and signals you should pay attention to. For example, declining earnings from a large corporation, overall markets that are trending down, inflation That wipes out savings accounts of older Americans, and it uses up all the cash of the young Americans. Keep in mind, those government employees, they get a COL. What's that? A cost of living, and you don't get it. A cost of living raise. They get a raise, and you don't. When interest rates are rising, they're destroying your ability to buy real estate and rent real estate. Pay attention to automobile sales. They're a huge economic indicator. Keep in mind, cars are freedom for the average American. Cars allow the average person to drive into the city where the jobs are good and high paying. If the interest rates go up, home sales go down. If people can't afford a house, there's no American dream. Finally, be suspicious of markets, especially bull markets. Stock markets usually crash shortly after a big bull market. So what's at stake here? Your retirement? Your success in the future? Your family life? These are all signals. I don't know what the market is going to do, but you need to prepare. There are patterns. Markets do the same thing. When markets crash, there's always a reason. Diversify. Diversification is a buzzword. It's your financial safety net. In a moment, we will dive into how to spread your investments and protect yourself from these unstable markets. For 30 years, I've taught and referred newcomers and investors to an alternative investment of tax lien certificates and tax deeds. Imagine earning passive income from tax lien certificates and the market around you is crashing down. These certificates are issued by local government and they are secured claims the local government has against property owners. Tax lien certificates pay fixed rates of interest until maturity. These certificates are predictable, they're certain, and they're secure. Your money is protected by the property tax code. Tax lien certificates are secured by the property. If you don't get paid on the certificate, you get the property for pennies on the dollar with no mortgage. It's the law. Local governments pay outrageous interest rates, 8%, 12%, 18%, up to 24%. The interest rate is fixed by law. It doesn't change with the stock market. The interest rate will not fluctuate up or down with the bank rates or the market. The rates are fixed by law. As I wrap up this lesson, remember, a market crash is not the end of the world if you are prepared. Don't get caught unprepared. Turn this challenge into your own success story. Surprisingly, tax defaulted property is sold at auction with no mortgage and no deed of trust by local treasurer for as low as 20 and 30 cents on the dollar. That could change your life dramatically when you sell that property for a huge profit. I'm going to reveal even more about this in the next video that is on the right-hand side of your screen. If you're serious about turning crises into opportunities, claim your free gift by clicking the link in the description below me for an exclusive, insightful report on secure investments in real estate. It's wise to remember the knowledge can be power, especially when it comes to navigating financial markets. Staying ahead and being informed is your responsibility. I'll see you in the next video. I'm Ted Thomas.